Hi, I'm Neil. It's been a few weeks since I recorded a video, with the last one being about Apple's earnings report. Today, I want to talk about Apple's share buyback program. 2 weeks ago, I wrote a post titled Apple's Getting Paid to Raise Debt. Essentially, Apple's taking advantage of the low interest rate environment by issuing debt, taking those funds, and then buying back shares. In the process, I think Apple is actually able to make a small profit. Now, I received quite a bit of feedback about the post. A lot of people want to know, does issuing all this debt increase the risk level for Apple? Is this a good thing or bad thing for shareholders? And what is the long-term plan for Apple's share buyback? The first thing to keep in mind about the debt is it's not due all at once. If you take a look at this exhibit, the maturities are spread out between 2016 and 2044. So one example is if you take a look at 2019, there's 2 tranches worth $3 billion. When that becomes due, Apple could just use its U.S. free cash flow to pay off the debt. And again, free cash flow would really just be money from selling iPads, iPhones, Macs, and in 2019, you can include Apple Watches. So the total debt level, it's manageable. The other thing to keep in mind is the total cost of capital for the debt is less than the total cost of capital for the equity. So by issuing debt, taking those funds and then lowering the amount of equity, Apple's total cost of capital for the entire company, it could be lowered. And that's going to increase the fair value of Apple shares. So the debt's manageable. Apple still has room to increase that debt load, and Apple shareholders could actually benefit from Apple raising debt. Now, last week, I took a couple estimates as to what I think the pace of buyback may be going forward. In one post titled, Apple's on track to buy back 20% of itself by 2017, I estimated that Apple can keep a pace of $50 billion a year in buyback for 2015, 2016, and 2017. In the process, it could repurchase almost 1.1 billion shares. That's 20%. Now, before we get into those details, I wanted to just give an update on a couple of exhibits I went over in one of my videos in the past. The first is Apple's cash. Taking a look at the first quarter of 2015, which again is the earnings that were just reported, Apple now has $142 billion of net cash. That's up from $120 billion at the end of 2014, the fiscal year. So for Apple, last quarter was really strong. They increased their cash by $22 billion, and that's even after all of the share buyback. Taking a look at where the cash is located, U.S. cash is now $20 billion. That's up by $2 billion. But you could see foreign cash, it's a big chunk, $158 billion. So this is the next table where I start to include some estimates going forward. So I took a look at what do I think is Apple's free cash flow over the next 3 years. And you could see there's growth from $18 billion in 2015 to $24 billion in 2017. I then make an estimate as to how much debt I think Apple will raise each year. So again, got to keep in mind, interest rates remain low, and Apple has plenty of capacity to increase its debt load. So for that, I am including $25 billion of new debt every single year for the next 3 years. The total is the new capital available for the capital return program. That's the share repurchases and dividends. You could see it's about $45 to $50 billion. And Apple already has $20 billion of cash. So I think $50 billion a year, I think that's reasonable. And here in Exhibit 4, you could see buyback $50 billion, so that's a total of $150 billion spent on buyback over the next 3 years. And I make a couple assumptions as to what the stock price will be. I estimate starting around $130 and increasing. Again, the stock price is important. That way you know how many shares can be bought back. The total, 1.1 billion shares repurchased. So that would be roughly 20% of the company. If you keep in mind, Apple already purchased 10% of shares. So the share buyback up to 2017 could have repurchased 30% of shares outstanding once the buyback program started. So what does that all mean? Is this a good thing or bad thing for shareholders? Well, in essence, It depends. Share buyback in of itself does not increase the value of Apple. Cash is simply being moved from the balance sheet to the shareholders who are selling their shares. However, there's a couple benefits here. In theory, by giving excess cash back to shareholders, Apple's management team is essentially facing more risk in the way of they're now having more debt and less cash. So what investors typically do is they think that Apple is not going to waste as much cash. Again, this is a theory, but that's one reason why investors like share buyback programs. That way management doesn't waste the cash. Now you can make an argument that out of any management team, Apple would be the least to waste cash, but that's the theory. The other point here is Apple is good at selling products, designing, putting hardware, software together. That's their core competency. It's not taking excess cash and investing in fixed income securities or in a way forming a hedge fund with billions and billions of cash. So the theory here is if Apple gives away its excess cash, investors may be willing to value Apple shares more appropriately with a higher multiple. So at the end of the day, I do think the share buyback is in shareholders' best interest, especially considering the low interest rate environment. Apple's able to raise all of this debt to fund the share buyback. Meanwhile, all of the cash in foreign subsidiaries, it hasn't even been touched. And Apple can use all of that for actually organic growth. And you see that with Apple investing in data centers and also probably component orders and other things like that. So that's a little information about share buyback. It's a big deal. Even after including the $150 billion of share buyback that I'm estimating from 2015 to 2017, Apple may still have $225 billion of cash on its balance sheet. That's enough to work on new projects, expand R&D, and really continue the buyback. So I'm starting to think going forward, the share buyback may be one of the bigger factors impacting Apple's stock price. But for now, that will conclude today's video on share buyback. If you have any questions, you can always reach me on Twitter at Neil Seibart. Of course, all of my full posts are over at aboveavalon.com. With that, I will conclude. Thank you for listening. Thank you for watching. I'll talk to you later. Bye.